Morning traders, today is Wednesday the 17th of February 2021. My name is Neville Hornsey. I'm a market analyst for YouTrading, and today we're going to be talking about the US dollar versus the Japanese yen. Last night's tier 1 data was from Japan. They had the balance of trade and that didn't quite meet the market's expectations. So we'll have a look at that data and see how that's going to affect the dollar yen going forward. So here we have the Japanese balance of trade since 1963, and you can see that more often than not they are a nation of exporters rather than importers. And in the overnight trading, the balance of trade data came in with mixed results. As I said, the Japanese Minister of Finance did come out and say that the exports to China grew at the fastest rate since April 2010, and that the Japanese machine orders year on year are up a massive 11.8%, which beat their market expectations, as they were expecting a negative 3% figure. The Japanese surplus isn't quite happening at the moment. The overall balance of trade gone into the negative, and if you look to the US balance of trade, you can see how the USA has been a nation of importers since the mid-1970s. Looking at the charts, if we look to the bottom left-hand corner, where my cursor is, the USDJPY has followed a similar path to the US dollar index, which is the one above, since March 2020 spike high. As the US dollar decline has basically weighed on the USDJPY, but that trend in the decline in USD has actually been going from late 2016, early 2017 against the yen. If we look to the weekly charts on the USDJPY here versus the euro, the Aussie and the British pound, we can see that since March 2020 lows in those pairs, the yen has actually been steadily weakening across the board, and compared to the major crosses, the yen has the highest volatility at around 1% versus say the dollar, which is a volatility on the index of around 0.28%. The US dollar has underperformed all the major crosses, with Japan's yen coming in the next lowest performer. Conversely, the strongest performing currency last year was the Australian dollar, which shows an overall 16% rise in valuation. Technically, the dollar yen is breaking out of a downtrend, and that was in a very tight, sort of controlled channel. And you can see in the last few weeks we've broken out of that channel. And if we turn to the daily, support came in at this swing low around the 104.5 level before it continued to push higher. Key resistance is around the 106.50, which was a level in the past which acted as support back in early 2020 through to the mid 2020, and then became resistance at the end of the sort of summer of 2020. And that's kind of where we're trading right now. Should we get above this resistance, the next key target would be the swing high from June 2020, which is just below the 110 level. Near-term price action is making higher highs and higher lows, but again we're in a very tight range. Which is being controlled up to this resistance level, and any signs of weakness will be indicated by a break lower than this rising lower trend line. This may happen if the USA should take a turn for the worse due to COVID variants, or around their vaccination program not quite meeting expectations, or if the monetary policy from the new US administration fails to deliver on a stronger dollar. For now, I'll be looking to see if the dollar yen can get above the 106 sort of 50 level, and then see if we can retest and confirm this as support. And if we do see some price action which suggests that this is now resistance, I'll be looking to see if we can break lower than this swing low, and then see if we can continue on this downtrend. Okay, stay safe, trade well, and I'll speak to you again tomorrow.